Right. Hello, hello, hello. Welcome, everyone. I'm Darkpole Algo, and thank you for joining me on another. Well, hold on. On the first, I don't know, this is the first time I've ever streamed the weekly watch list, so thanks for joining me. I really appreciate it. It's been a busy week, man. I've had lots of things take place over the weekend, and got moved. So streaming, new background. You guys can hopefully, oh, you can't even see that. That's awesome. That is awesome. Let me fix this real quick and hey. Yes, I'm back. Now you can see my big old head in the way of everything. All right, so I'm gonna do this a little bit different since it is the weekly watch list. I go a little bit more in depth and try to find some actual options plays to look at. And hello, chat. And I need to get a notepad up so that I can take notes. Once that gets fired up, we'll get some notes going. If nobody joins me, oh, what I need to do is I need to do one more thing real quick. All right, I'm recording this, so I will upload it later to YouTube. So I got a notes section. Oh my gosh. The morning stream is way more smooth than this, I promise you. It's crazy how just changing things up a little bit just kind of throws everything in the world off. So let me just get my weekly watch list here. All right, top 4 stocks for this week are, oh man, it's not Pinduoduo, that's for sure. It is, all right, top 4 stocks are Wayfair. Come on, just, there we go. Finally, Wayfair Mrtx. Okta, OKTA, and last but not least, DD. Or was it Datadog? We're going to go with DD. All right, so these are, I'm so torn between OKTA and DDOG. I don't know which one he thinks looks better. I personally think, oh, that's just a tough call, man. It trades pretty well with price action. Divergences usually play out. Consolidation up. Tell you what we're going to do. We're going to do OKTA, and if we have time, we will come back and do Datadog. How's that sound? I think that sounds pretty decent. Pretty decent. All right, so I'm Darkpole Algo. I am a smart money Darkpole block trade algorithm software analyst. I'm a day trading options trader. I like to scalp options. Every week I do a weekly watch list where I try to find the top 4 stocks that have the greatest divergence and that give us the greatest opportunity to play out that divergence. I use a tool called FlowTrade. FlowTrade has created their own algorithm or their own flow index, and it tracks smart money, Darkpole, block trades, large institutions, hedge funds, the big boys. And the way that it tracks those is it's created its own predictive leading indicator, which is this flow index. That's the purple line. Green bars are price action. Blue lines across the screen are Darkpole block trades. Red lines, if they show up on the screen, are regular block trades. And white lines are fun. No, white lines are when a regular and a Darkpole print so close to each other that that I can't get, you can't separate them out. So those are major inflection points. I usually request that you guys mark those up on your screen and see how price interacts with it. Now, what we also look for is divergence. Now, for example, divergence on W last week was smart money was net selling, so the divergence would have been to the downside. So this would have been bearish divergence that has played out because the flow index and price action have come back together. They traded together for a little bit, and at this point here, approximately this point here, the flow index still buying into these positions as price is coming down. So that means there's a divergence at approximately this 140 level that we're looking for price action to come back up to. Flow index is making a series of higher highs and higher lows. So smart money is still buying into these positions. They're putting money into it. So price should come back up to at least that point of divergence. Now, the way that smart money works is just simply put, if they drop multi-million-dollar orders in, what will happen is it will immediately eat up all of the available shares and all of the liquidity, right? And so buyers will come in and realize that there's no shares, and the bid is way up here, or the ask is way up here, and then they start making a lower bid, and eventually lower and lower and lower until they find some liquidity and some shares for buyers to buy in. And at that point, the price is actually lower than the level in which smart money got into, so they're in a negative trade already. So to combat that, what they do is they scale into positions as price is coming down. They're scaling in so that once price starts to reverse, they can start selling out, and they're selling out as price is moving up. If you have lots and lots of money, that's probably the way you have to do it. Okay, so first stock is Wayfair. We do have a little bit of bullish divergence, which I talked about, and it looks like price action has been falling, and looks like the flow index has been moving since about this level here, as you can see. I'd be really interested to see if the flow index uses this level of support and continue to make a new higher high. If that happens, I would look for it to pull price up through this dark pool that came in on the 4th at the close for 125, up towards this other dark pool that printed back on the 28th at 140.87. So that would be a pretty decent move. We're coming up into some overhead resistance right here at this 120. So there's a trading zone from about 120 to 130. W, which is Wayfair, has about an $11 ATR. And let me just show you some other tools that I use here from a technical standpoint, not you. We want W, and W. There we go. All right. All right. So Wayfair had earnings back in February. They've been selling off. They rallied up to the 21 EMA last week at the beginning of March, and have been trading at about -1 ATR. So we're looking for that move back up to 1 ATR and possibly up to +1 ATR, maybe towards that 50-day, right? So they traded away from the mean, which is the 21-day EMA, all the way down to -3 ATR for earnings, and have rallied since then back up to the mean and pulled back. Now, they can either continue to move down towards -2 ATRs, right? So 123 down to about 110. This is the TTM Squeeze Pro, right? Slingshot failure, slingshot failure, slingshot failure. Maybe we get another slingshot squeeze releasing that will help push price back up to this 21-day ATR at about 136, 138. Radiant Fire, which is a slow stochastic, is issued a fire signal back in the end of February. We're at the mid now, so we could go from mid to bottom. So we might get a little bit of a pullback, but we're a pretty decent support. Currently negatively stacked moving averages, but like I said, this rally up to the 21 pullback, That's what we're looking for, that next move back up to that 137, 140 level. From a Keltner channel perspective, let's see. I'm not super thrilled with that chart. Let me just possibly. All right, here we go. 30-minute. I usually have these in order, so let me just move them around a little bit. All right, so daily. All right. Breaking it down to the 30-minute, Wayfair is in a massive consolidation of Keltner channels right now. So off of the currently supported in the monthly bottom cloud, off of the 4-hour, right, support with the daily below it. So if we do fall and break below that 123 level, we can move all the way down to about 119. If we come back and back test this 122 level, it confirms support. These high compression squeezes fire off to the upside. We can get a move up to the 4-hour mid at about 130, and then possibly the daily mid at about 136. The 4-hour top would be the ultimate goal at 138, but that would be starting to get into the weekly cloud. So it would take a lot of conviction, a lot of volume, and a lot of strength coming into this to get this squeeze to fire off to the long side, which could easily push us up 130, 135, 138, right? So longs are looking at 130, 135, 138. If we do break down below previous lows, below 122, we can see it move down to 119, 113, 111, right? Shorts would be 119, 113, 111. All right. A little concerned we're below VWAP, below point of control, and below the Ichimoku cloud here on our 30-minute negatively stacked moving averages. We need to look at pullback on this because to go long, we like seeing 821. See if I can get an example of it here. 8, 21, 34, 50, and then 200 is usually a bullish setup. The inverse of that is 21 or 250, 34, 21, 8. That's a bearish setup. So let's throw a fib up on here and see where we can possibly retrace to. So from high to low, all right, there we go. We're up. We're currently just riding that 618, right? Consolidating at that 618. Breakdown below previous lows. We could retest this 50% retracement from this high, or excuse me, from this low, 93.50 to the high of 143. We retrace to 618 at 123, 124. Possibly pull back to 118.37 below that 112. That fits in line with our Keltner channel. So we just talked about. Remember, I was like 119, 113, 111, right? Well, Fibonacci levels are 118.37 and 112.46. Below that, right? Below that 112. Let's see, 118. Sorry, I'm just writing notes over here. 110 is a pretty psychological level. Looks like we stayed there for a minute before. So there's definitely some pullback. And this is a 30-minute chart available on Wayfair. From a Keltner channel perspective, let's see. I mean, we've got 4-hour bottom. You know, on Friday, we made a series of higher lows and higher highs, right? So the upside targets would be 128, 130, 135, and 140. So nice whole round numbers. And let me see if I can pull up. 1 second here. Let me just do this. Give me 1 second. I gotta check one thing. The stream is still there, I promise. I just gotta check something real quick. All right, so let's do this. All right, let's get Wayfair up with options contracts, right? Let me break this out. One second. Got to get my, didn't have my charts all the way set up. Like I said, been kind of a rough little while. So I'm going to put this over there and this down here. All right, so Wayfair, we are looking at longs like the 130, 135, 138. So market makers are expecting about an $8 move, $13 total. So Wayfair's ATR is 1150. Is that 130? Not a lot of volume, not a low open interest on the call side. If we go back over here to put side, kind of the same deal. At least this week's. We went out to next week's. Pretty similar. There's not a whole lot of options trading that seems to be happening. Oh, this is a weekly expiration. Are you serious? Whoop-de-whoop. All right. 130, 135, 138. Those 135s, the bid-ask spread on these is just wide. So not a lot of volume, not a lot of open interest on those. 123 puts. So if we maintain support and we decide to go long this week, let's look at the 135s. The bid-ask spread is better on the 138s, but there's just nobody buying those. I think that we may see some influence coming in. Wayfair may get some attention this week. So 135s at $1.95 to 230. That's about the lowest delta I'd like to go on those. And then to the short side, 118s, nope, 112s. 112s are looking pretty decent. Not a lot of volume of open interest there. Those 110s. Sorry, I'm just checking. 112.56. All right, let's do the 115s. 115 puts and 135 calls. 115 put, 35 call. So that's what I'm going to be looking at for Wayfair if things decide to go one direction or the other. Mrtx is going to be next up on our list. I don't understand how they got there. Usually I try to get stocks that have weekly options, but for some reason I messed up on that. X. All right, looking at Mrtx. So it looks as if the flow index has been net buying into this position since back on the 8th, right? There's been opportunity. There's been times where it's traded with the flow index, 1 to 1 to 1 to 1 to 1, up until recently where this is consolidating, right? Kind of compressing while price action is coming down. So we have a little divergence back on the first at the $91 level. Mrtx about a $6 ATR. So if we went here, $6 ATR is trading at 83. So getting back to point of divergence off of this dark pool level at 83 for a move back up to 88, possibly 91. Have to get through there. So 88 is a dark pool, 91 is target. So longs like the 88, 91. So we got a little double bottom happening here too. So below that, we'll have to find some fib levels and see what we got going on there. So longs like the 88, 91. All right. So this is a stock is trading at -2 ATR, double bottom off of earnings. It wants to revert to the 21, which is at 96, with previous overhead resistance at 92. So a rally to 92, above 92.50, moved to 96. Got to move to 96. If it does break down, if it does break this previous support level and trades down to -3 ATR, so we're looking at a move from about 83 down to 77, right? Shorts. 83. $77. All right, looking for a slingshot squeeze. This radiant fire fired down just like it did previously here. This fired down, immediately fired back up, and we got a nice little rip. This is very similar. If you look at what happened here, right? If you look at what happened at that point in time, you can see that we can move this over. Very similar. Radiant fire fired down, crossing back up, slingshot squeeze, squeezed around. We got a nice move. Went from 105 to 121. All right. Not quite an H-shaped pattern, but definitely negatively stacked moving averages. We're trying to catch the reversal here. If we do have to come to the short side, I'll throw up a fib on one of my other charts here. But this is what's got me kind of interested, right? So MACD is getting ready to cross over. We're outside of the daily Keltner channel using the 4-hour bottom as support. If we can get back up above into the 4-hour, so up in that 84 level, we have a move from the 4-hour daily bottom cloud, right? Daily cloud bottom to daily cloud bottom top, 87, 88 level, right? That 87, 88 level. Above that, we can move up to the 4-hour top at that 91, 92. Okay. Start hearing the same numbers, start seeing the same things. Okay. Negatively stacked moving averages, point of controls at 87.50. We have VWAP coming in at 91 as well. The move would be reverse up to here, slingshot squeeze, MACD crossover, lots of things getting ready to reverse. If we need to look at a downside move, if I were to run a fib from right, reverse to the, up. So if it's a longer move, rally back to the 21, reverse to 382. So that's at 87, 88 for the longer move down. If support cracks, we have a 127 at 77.65 and then 75. So we need to look at 77.50 and 75 even. So 80 psychological, 77.65, 75.87. So there's the upside and the downside. All right, this is a nice move on Friday, right? Found support, higher lows and higher highs, support, higher lows and higher highs, support, higher lows and higher highs. Actually broke. It's like we had a 4-hour bottom to 4-hour top. That's not the right ticker. There we go. I was like, wait. So massive amounts of support here. MACD getting ready to cross over. Stochastics getting ready to cross over. Like I said, we're just looking to capture the move, a break of 83.78, right? For a move up to 88 level, right? Above that 88, we look for a move to about 91, 92. Okay. Mrtx on the options chain. All right. Mrtx options chain. Longs, we said, oh my gosh, that's a wacky bid-ass spread. 115s by March 18th. No. So Mrtx is officially off of this list. I just wasted time. We're going to use Datadog. All right, next up on our list is OKTA. I know these ones have weeklies. All right, so Let's see, we have regular block cluster and a dark pool level that's going to act as a magnet. Price was trading with the flow index. Something happened and we gapped down, tried to recover, and sold off. So there's a little divergence that's occurred at this 161 level, and then price should get pulled back up towards this 170. There's obviously a gap from 172 to this regular block, so 182.71. So on Okta, longs like 161, 168. Then there's a gap from 172 to regulars blocks at 182. 172. All right. As long as the flow index continues to make higher highs and higher lows, this could be a nice little double bottom. If it starts breaking down, then we can have to look at the downside too. So see what I mean about this 21-day, this mean, how stocks love to just chill at it. They'll move away from it and then snap back to it like a rubber band, right? So that's why we call it the mean. So 1st of March, we traded all the way down to -2, traded all the way down -2 ATR, snap back to the mean. Trading down, right? Trying to find some support to snap back to the mean. The mean's at 180, right? So 180 is the mean. Okay. Possible slingshot squeeze coming back. Bad, they had good earnings, but they sold off with the rest of the market. 20 control is way up here. All right, so nice little rally up to the 34 EMA and sold off back down to support. So I'm looking for another move back to the 21, so that 180 level. I like that 180 level, 188. So 180, 188 calls, and then right, coming right off of this, last time we were in the monthly bottom Keltner channel, right? Support here, daily bottom support. We're below the 4-hour though, so we'd look for a move from 160 to about 165, right? Through 165, back test that for a move up to the weekly at 173, 175, 180, 188. Okay, so that would be first target's be 165, then 175. Okay. MACD crossover, ready and fire, getting ready to release. TTM squeeze getting ready to fire over. Okta has an ATR of $12 a day, right? So 160 to 180 is really only 2 days. Well, 160 to 188 is what? Technically 2 ATRs away. So massive level of support here. If we can get back up in, above this 165 level, then it starts to get pretty chunky on the way back up. Good levels of support, super bullish on this, right? MACD cross down kind of killed us. If we had to look at a downside move, go from that high to this low. Let's see, remove. I grabbed the wrong one. Grab the wrong one again. Sorry. So downside move would be on the break of the low at 150. We got 138, 132, right? So below 150, we see 138, then 132. All right, so how we looking? 138, 132. Not a lot of open interest. Those 136s have got a little bit of open interest, but it looks like call side definitely is winning on this. So these 165s, lots of volume, low open interest. 170s, pretty decent. Bid-ask spreads aren't too bad on those 170s considering. So we were looking to go 165, 175, 180. There's just not enough juice in it to hit these 180s, especially in this week. If you went out a couple weeks, let's see. Let's go to the monthly 180s. Those are pretty decent, right? I don't like the delta on it. 175s. It looks like the move's going to be this week. I'm just going to catch people sleeping, right? Going to catch them sleeping. So unfortunately, you're probably going to have to grab these 182 50s and then roll up as you start making money as more people come in, right? These double, you buy the 172 50s. These double, you buy the 165s, right? So that's the long side. Downside, we said 150 to 132. So if we break 150, right, we hit 138 is the target. There's just nobody buying these. Bid-ask spread is garbage. So, all right. And then last but not least, or DD is next. And I gotta speed through these. All right. DuPont. DuPont and war just seem to go hand in hand. What did I do? All right, don't need that. All right, DD. Nice little bullish divergence coming off of some regular block trade support at 74.39. Got a dark pull at 75, 76, 77, 77 magnet. So divergence has kind of had micro divergences that have played out. So this is pretty fresh, right? There's not a ton of it here, right? It's really fresh. Divergence is pretty easy to spot here. All right, so we would look to break above this regular block trade at 74.39, get back into the 75 resistance above 75. This dark pole is going to be a magnet to 75.92, 76, 77. Right, I don't think we quite come back up to 79, so I'd be looking at the 75, 76 calls, right? Longs like these 75 to 77 calls. And $2.61 ATR, so that's pretty decent. You can definitely ask that of it. Look at this choppy chop, right? It's having struggles with the 200. It is chilling at point of control. Looking for the slingshot squeeze to release. It's dividend day, did a number on it. We can get above 76, right? That 77 call. Move to the mean back up at 78, and then maybe test the 50-day at 79. So 75, 76, 77. So let's look at the 76, 77 calls. All right. Sorry, 76, 78 calls. All right. Squeeze releasing. All right, we're waiting for the, so we're not completely bearish in that our moving averages are stacked negatively. We're below them, but they're still lined up positively. So we could bounce off this 200 and then just simply squeeze, just consolidate back and forth between this 50 and the 200. It's kind of all over the place. Waiting for these squeezes to slingshot through, medium compression squeezes slingshotting through to release to the long side, pulling back up towards that 77. However, if we can't do that and we back test the lows at 73, 72, right? 73, 72, probably a $70 magnet. Let me just see what we got here. I need to look at one more thing. So that's one ATR. If we went down to two ATRs, that's 72. 3 ATRs is 68. So 72 70s. Okay. All right. We are chilling at the 4-hour mid in touching the daily bottom. All right. So we'd like to use this as support to bounce up to the 4-hour bottom, daily bottom, move to 4-hour mid at 76. 4-hour top at 78, daily mid. Contrarian, if we fail, 74, we move down to 72. Below that, 70, monthly mid 72. It would take kind of a big force to get below 72. If that happens, we come back down to 70. So like I said, I like the 72 70s. I also like the 76 78s. Okay. You could possibly do an iron fly, but this 4-hour Keltner channel is compressing, so it's squeezing. The daily is compressing and squeezing. It's just little blips down. Little algo flushes down. MACD is going to cross over. Slingshot squeeze. We have the 200 day at 78. We've got VWAP and point of control up here at 7750, 7760. Right, big old magnets to come back up. Looking for this type of move here. Whoosh. This is a good example. Whoosh. So from here, back up there, right? A downside move would be did I do that again? I don't understand. The downside move would be, all right, we break down below 72, below 72, 68, 66 incoming, right? So failure would be below 72, we have 68, 67. And to the upside, 76, 78. All right, and daily bottom, move back up into the 4-hour bottom, move up to the 4-hour mid, possibly 4-hour top, daily mid, weekly mid. Okay. Finally, last but not least, Datadog. Oh, wait, hold on. My bad. I always forget to do this. I'm trying to get better at it. DD options contracts. So shorts like the 70s to 70s, right? The 70s have a pretty decent bid-ask spread, decent open interest, decent volume. Yeah, that's about it. I don't like that delta. That bid-ask spread is, you could drive a truck through it, but you're not going to get anything better on the put side. They're all just jacked. And this option chain is jacked on the call side. Like the 76, 78, is that what I said? 76, 78, those are even worse. Man, this option chain is jacked. You might be able to snake it. Let's go to the monthlies. Look at that volume and open interest out here at 83. 5,000 open interest. Big ass spread, bid ask spread. If we go out to the 18th and we look at those same 76, 78s, those are jacked. On the put side, 72, 70s. Wow, this options chain is just garbage. I think we might have found a glitch in the matrix. Might have found a glitch in the matrix. All right. And last but not least, Datadog. I want you to know there were some heavy hitters on the watch list this week, but I'm trying to stay away from the same old, same old. So DDOG. All right, flow index came down, divergence played out, traded with price for a while here, traded with price, 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 and then a drop. And that flow index continued to make higher highs and higher lows. So divergence has occurred, right? And the flow index is still maintaining its higher highs and higher lows. And we've got these regular block or these dark pool blocks up here, right, that are magnets at 162, 164. And we're coming into a trading zone that runs 140 to 145, right? And then nice move from 145 to 148. At 148, there's going to be some decisions made. Because if we get above 148, then we're back into a trading pattern. So 150 being the psychological level. Longs like 140 to 145 move. Then big move to 140. Let me just double check on this real quick. It's 148.50. That's the point. 148.50. I'll have to go and look at the shorts here in a minute. So Datadog ATR of $11 a day. It can really move. So what do I like about this stock? Well, it held a 200, and the 200 is 1.5 ATRs away from the mean. Okay, so point of control is at 136. The 200 day is at 142. We're just starting a histogram down cycle, right? Where we may come down and close, have an opening down day where we close above the 200 but wick down to -3 ATRs. So shorts are going to like 137, 131, 118, 137 break. It's 131, 118. That's crazy. Longs be like, hey, we want to rally to 160. Oh, that's a bug in here. 160 and possibly see 142, sorry, 146, 153, 160. Look at this one more time. So we're at 145, 153, 160. 3. Yeah, 153, 160 targets. on the break of about 147.50. So move from 140 to 145. Then if we get a big nice single day move up to about 148.50, we'd be targeting 153, 160. I want to look at the 150, 160s. 150. Yeah, 150 is probably the most. 150, 155. That's 153. 53. All right, 153, 155. I'm going to try to start being a little bit tighter on these, okay? All right. Same kind of move we saw earlier. Daily cloud held. We're going to get a little down cycle with the histogram, right? It's got to curl back around. Let us consolidate here for a little bit. And then we're going to launch back up. How long does that take? Well, it took a couple weeks last time. It can take a couple days. It all depends. Like this 200-day, holding the 200-day and the daily cloud, Ichimoku cloud is pretty impressive, right? So if these moving averages can start popping back up, then I think we can get some pretty decent moves, right? I'm going to go a couple weeks out, look at the 175, 160, 175s. Right. We are at daily Keltner channel bottom support. Below us, we have the weekly down here. So the downside would be the move from here to 135, 129. Shorts like 170, break to 131, 118. 135, 129. Or we bounce off of here and move up to the 4-hour cloud, right? That 145, 148, right? Above 148, we get a move up to 156, right? 160. So we can easily rally up to 145 and reject, come back down for downside move, right? We're getting a MACD crossing over, radiant fire firing off. Like it looks pretty decent. Maybe a little inverted head and shoulders, but so downside 135, 129. That's if we break 140.53. All right, we like the move to 145, from 145 to 148. VWAP at 155, point of control at 160, going to act as a magnet. All right, this 30-minute chart, we're going to start curling back around, MACD curling around, double bottom, got to move back up. Right, daily bottom, 4-hour mid, 4-hour mid, daily mid. Okay, so if we were to look fib level from here to here, right, 128, 124, that's if we break down below 136. So the short's like 140, right? I gave it a little benefit. 140, 135, 129. Right, that's a 127. Okay. Let's look at the options, shall we? We shall. So starting with the shorts, there's not a ton of open interest and volume on this week's expiry. We go out to next week. Massive open interest at those 120s. A little bit better at 125. Pretty balanced at 130, right? So I said below 140, we go to 135, right? Pretty decent bid-ask spread. 129, it's getting a little loose out here, right? A little loosey-goosey out here. If you're gonna go this low, I would try to get some more time. maybe go out to these ones. You can have definitely pay a lot more. But look at the open interest. There's lots of open interest. Okay, to the call side. So 140, right? 145. Break above 148.50 for a move to 153, 155. Ugh. I think the furthest out I would go would be the 152.50s to the long side for this week. If you went out to next week's, you could probably get, I mean, it's the days of saying, if you go out to next week's, you could do a 150, 160, 170 butterfly and know that price would get there, which it looks like they're doing. Somebody's doing the 150, 160, 165, and 150, 160, 170 fly. So they're thinking price at 160 in 2 weeks. It's pretty decent. So, all right, I gave you all some options. I gave you some the top 5 for this week. I think that's it. I gotta run. I gotta finish unpacking. I'm Algo. I will see you all tomorrow morning, 7:30 Eastern Standard Time, as we do the pre-market prep. Just so you all know, let me just show you what this looks like. What's going on in DOTS futures land? Y'all want to see? I will show you. And the futures are going crazy. So we closed 43.20. We gapped down to 42.50. Big gaps down. Big old gap down across the board. Look for the NQ to continue to fall off a cliff. All right. This is our snow line that we pointed out on Friday to the downside. 13,500. Does that help illustrate a little bit better? Yeah, crazy. Gold broke 2,000 an ounce. Crude gapped up from 115 to 130 a barrel. It's just phenomenal. Bonds. If this, you would be a millionaire if you'd done this one. The 158, 160 TLT call. Ripping. All right, gotta run. Thanks for joining me on Algo. I will see you all tomorrow.